All right, let's jump right into the chart. And on SPY today, we were up 1.19%. And so far, the arrow has largely played out that we would go down, fill this gap at 497, and then bounce up here towards this resistance, which was somewhere between 506 and 507. And really what I'm looking for here is a test of this 50 EMA from the underside, because I want to know if we're still in a downtrend or if we just had a pullback and we're resuming the bull trend. So when I get price action like this, I'm not really trying to guess where we're going from here. I'm simply just in cash and I'm going to react to the price, and I'm looking for a reaction on a break above 507 and a push towards this negatively sloping 20 daily moving average, and that will tell me if we're going to get a bull breakout yet again. And if we don't get the bull breakout, then I'm looking for a rejection from 507 or the negative 50 EMA, and then a push down to the next leg lower, which is going to be right around 491 to 492. So remember, I don't care as a trader if we go higher or lower. I simply just want to be on the right side of that move, and the move to the upside is not that large. So I really don't want to be heavily long here, and the move to the downside is large enough. That also makes me not want to be heavily long, but I don't just want to assume we're going to get the down move. And I'll be 100% honest with you, I think way too many people are assuming that this is just a lock, that we're going to get this lower high and it's going to be a super easy short to the downside. And I'm not saying it won't happen, but when everybody is expecting something like that, I personally don't think it's going to happen, because it's just way too obvious if everybody's looking for this and everybody just thinks they're going to short this lower high and make a ton of money to the downside. I hate to break it to you, but if it's that obvious, the market's not going to do it, because there's too many people trying to take that trade. The trade becomes overcrowded, the market moves against you to hurt the majority, and you end up losing. So I don't really care what happens from here. I'll be watching in cash and I'll just react. If we get a rejection from here, I'll have plenty of cash to take advantage of that rejection. And if we get the bull breakout and we start to push higher, I'm going to be right back on that bull, riding it to the next price targets higher. And above 507, we will be looking for right around 513. And then above that, we have 520 and then 525. So here's all of the levels. It doesn't matter whether you're trying to short or go long. Just make sure you're only shorting near resistance and only going long near support. That way you can manage your risk. If you're buying somewhere in between support and resistance, you're really just going to get whipsawed and you're going to have a very bad time. So be disciplined here. Let the price action do the talking. If you want to go ahead and guess, that's completely fine. Just manage your risk around this level at 507. And if we start to break above it and you're trying to short, you really should manage risk very quickly, because again, this is still a bull market, and on the weekly chart, we just had a bounce off of the rising weekly 20 period moving average. On the NASDAQ 100 triple Qs, we were up about 1.5% today, and we did fill the gap to the upside, which was this gap above 422, and we did break through that resistance at 423. So once again, I don't really see a reason to be shorting the triple Qs until we get up here around the resistance between 432 and 435. So in the short term, I still think it's possible this upside arrow plays out, and guess what is going to happen if the triple Qs push into the 430s? You are likely going to see the SPY pushing higher into those upper resistance levels as well. So again, I just don't see any reason to be overly bearish just yet, and a lot of people, again, they're just expecting this lower high rejection and that we're going to come crashing back down. And while that is a possibility, I just think there's too many people expecting it. So we'll have to watch what happens up around this resistance zone in the high 420s and low 430s. And if we get up there and then we start to see a very sharp reversal, it is still going to be a very low risk short to short in that zone. So I do believe there will be plenty of sellers in that area, but that also means if price breaks through it, that we'll have a short squeeze and we'll push all the way back into the 440s. So just know these levels. We're coming up into them very soon, and I think we'll likely see them tomorrow morning, because we are likely going to have a strong gap up and the big tech earnings are here, and a lot of bears are not going to be willing to short big tech earnings, so they're just going to sit on the sidelines, which is going to allow the bulls to push to these upper resistance zones. So watch those tomorrow. Don't have a bias. We can't care less if we go higher or lower. We're just trading. We're not investing, so we don't need the market to go higher, and we're not perma bears, so we don't care if the market has to go lower. We're just trying to be on the right side of this move. So look for that push to resistance, and then we'll see what happens to price once we get there. On the Dow Jones, we were up 0.69% today, and the Dow Jones is already at the critical resistance zone, which is the zone between 385 and 386. And if the bulls push through that, we are likely going all the way up here to fill this gap at 395, even though we will have the opportunity for a lower high right around 391. So right now, it looks like the Dow Jones is the leader. It held the support the strongest. It did not get the capitulation like the NASDAQ 100 on Friday, and after we bounce off of that support, it is the first to put in the pivot in a 3-day bounce. So you can see 3 green candles in a row right up to resistance. So what happens from here is going to tell us everything. We're either going to blast through resistance and go right back into the bull trend, or we're going to get rejected from here and come back down to retest the support at 377. Remember, if at any point 377 fails, we are looking for a very violent push lower to 370. On the Russell 2000 IWM ETF, we were up 1.67% today, and lo and behold, we hit the lower high price target, which is that resistance at 199. So again, we we don't need to guess what is going to happen. We simply need to react. We're either going to break through 199 and push higher to close the gap above 204, or we're going to get rejected from 199 and push down towards 189, or at least a retest of the rising weekly 200 period moving average at 193, which I also have here on the daily chart as a support zone. So 193 is extremely critical, and if that breaks, we have extreme critical support at 189, and the extreme critical resistance is up here at 199. On the ARKK ETF, we're up 2.98% today, and we did close the gap above 44, and it's still possible we push higher all the way up to 45.7, and that could still be a lower high rejection to another lower low, which could bring us down to 40. So watch this very strong resistance zone between 44 and 45.7, and the very strong support is now the previous low at 42. On the VIX, we were down 7.32% today, and we continue to crush down towards the price target. And I told you this would likely happen because I was expecting this bounce today. And if we were bouncing, it was very likely the VIX was going to crush, and the VIX is crushing down towards 15. But just keep in mind, if the VIX comes down to 15, it's still possible we get another spike in fear if we get that next leg lower. However, right now, we don't care to predict that. We need to react to it. So we're watching price action, and we are expecting the VIX to go a bit lower as we bounce into the rest of those resistance zones. On Bitcoin, we're currently trading just above 66,000, and we are finding resistance right around this 20 daily moving average, which is no surprise. And we did get the bounce or die support at 61,000, and we didn't die, which meant we obviously bounced. But it's still possible we get a lower high rejection anywhere between 66,000 and 68,000, so pay attention to that. And it's really just as simple as staying bullish above 65,000 and getting risk off below it. And if you want to get a lot more risky, then you're just getting risk off below 61,000, because below that we should see a straight flush down to 52,000. On Nvidia stock, we're up 3.65% today, and we did bounce back up to the resistance, which was the breakdown below 823, and we are holding the support at 780. But again, a lot of these could still just be lower highs, so we want to look for that very strong resistance right around 857 to 870, and that could still be a lower high before we continue lower to retest the breakout at 740. But as you can tell from the arrow, I thought there was a good chance we just come down to support and then continue higher going into earnings to a brand new all-time high between 994 and 1032. Again, these are just predictions. We need to follow price, and in order to get more bullish based on price, we need to break through this resistance zone above. Another option is to simply stay bullish above 780, and if that breaks down, we're looking for 740, and if that breaks down, we're looking for 689. On Tesla stock, we're up 1.85% today, and I told you there was a good chance Tesla was going through a capitulation, and when Tesla has a capitulation event, it typically gets a very sharp reversal into a V-shaped recovery. And I drew this last night, and today we did have earnings, so we're going to have to see if after the earnings we continue to see this V-shaped recovery, which should at least blast all the way back up to close all the gaps, and the top gap is up there at 161.38, and then if we blast through that gap, we're likely going to push all the way back into the 170s. So this is a very common occurrence in Tesla stock. This is a very retail favorite company, which means there's a lot of retailers in it, which are very emotional traders, which means even if they capitulate, they easily get brought right back into the stock because nothing changes sentiment faster than price. So if we start to see high volume buying and price starts rallying in Tesla stock, those retailers are going to come right back into it and squeeze out the shorts. So watch this closely. We have a critical resistance zone between 154 and 161. And if we break through all of that resistance, I do think we will go back to the 170s very quickly, which means we would be there by sometime in early May. On Apple stock, we're up 0.64% today, and Apple is holding that support at 165, but we're right back to resistance at 167. And I think if Apple can break above 167, there's a very good chance we go right back up between 169 and 172. And then from there, we're going to have to see if we just get yet again another lower high rejection, or if we can finally break out of this downtrend and get a bull breakout back above this resistance zone between 174 and 177. Now, Apple's earnings is not until early May, so still ways away, but keep in mind all big tech earnings that are starting this week are still going to have an impact on Apple stock because all of these stocks are in the same ETFs, and if they're all going up, they're going to push Apple higher as well. Also, keep in mind Apple has had a full-blown correction within a bull market, and this is one of the best companies in America and a very blue chip name, which is why a lot of people will have no trouble catching this falling knife because they know it's such a quality stock. And that is one of the only reasons you should be catching a falling knife. Never try to catch a falling knife in a crap stock that is going lower within a downtrend. But Apple is obviously not a crappy stock, and it's a very good company, and we are sitting near a very strong support zone between 163 and 165. That makes it very easy to manage risk, and if that support zone fails, then we're likely likely pushing lower towards 158. And again, I just don't know what that catalyst would be before earnings, and we still have a little bit of trading to go before we get those earnings. So pay attention to this support zone and this resistance zone and just trade whatever the price action is giving you. So jumping back over to the S&P 500, this is a very critical week because of the big tech earnings, and big tech moves the majority of the indices because those are the heavyweight top 10 companies that are the most heavily weighted in SPY and the triple Qs. So this should remain a very exciting week until we get through all of these earnings reports, which means having cash is going to allow you to take advantage of opportunities, and that's exactly what I'll be focusing on in the Stock Channel Discord server. And we are crushing a lot of these trades by simply just reacting to the price action around these critical zones. So if you want to come trade with me and get access to all of my intraday updates and technical analysis, as well as my trade ideas, consider joining the Stock Channel Discord server, and you can find out how to join the Discord server by clicking on the link in the description of this video. So good luck this week trading. It should be very fun and very volatile, and just remember to manage your risk around these critical levels. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.